assessment test. What is PICS? Come, let's start borrowing. Which one you say is number one? A credit spread with 4 legs, yes or no?
No.
Debit spread with 4 legs. One long, one short, one long, one short. Is credit spread short one, long one, short one, long one Is it different? Why not? Debit. By the way, what's the difference between debit spread and credit spread? It's the same. The only difference between debit spread and credit spread is one thing. The debit spread is the person who buy. The credit spread is the person who sell. That's the only difference here. Okay? A credit spread with 4 legs, one long, one short, one long, one short. Which one? Is this one?
C.
C. B and C.
You say you can buy or sell, but then you lose.
No. I said debit spread trade. Okay? So this is a buyer. This is a seller. So are you a buyer and seller? You can't get a buyer and seller at the same time, right? For whole operation, right? Okay? So it's C. Okay? Good point. Okay, for this trade, all legs position must be in the money, at the money, out of the money, at the money, in the money at the same time. Out of the money. Okay, simple question.
So C and C, right?
Yeah?
Number 1 is C.
Yes, to C. Okay, number 3, position setting for traders is day job. 50% of capital, 100% of your capital, 30% of capital. 50%? Yeah. Okay? How? Which one? B or C?
C.
Of course, you can put 50% if you want to, but you must understand your risk. 30% is bare minimum haul. Okay? Don't tell me you put 5% or 10%, unless you're telling me your account is $50,000, then 10% 10% is visible. I keep the title here, must at least only one go one time, you must try to put at least $3,000 worth of trades inside. $4,000, $6,000 of trades inside, but then 4 to 6 contracts, which is good enough for learning purpose. Thomas, I'm beginner, can I put 10 contracts inside? 10 contracts. 6 months, 4 months on road cannot. Start with 4 to 6 contracts, slowly work around it, plus minus. Okay? Thomas can start 2 contracts. You can start with 2 contracts, but the learning curve for 2 contracts take too long. How to learn with 2 contracts one time? Unless you tell me your 2 contracts is every week. But then 2 contracts every week also not good. Why? PICS can trade intraday, intra-week, weekly, monthly. So you have to do intra-week only. No, it's not a particularly good idea to emphasize on one. That's a problem happening to some of my older graduates. They face problem because they focus on weeklies only. 2-3 weeks cycle. 1 week cycle, 2-3 cycle. And the market not that good to this time frame. So what are most important things to succeed in your trading? Follow a system, not running change of position sizing, start trading after accumulating trade, complain about losing trades. Don't laugh, Don't laugh, I don't know people complain. Which one? B and A and B. The system must be followed. If you want contract, follow one contract. You say, oh, I cannot hit. This week I don't trade, next week I trade, kind of thing. And then it's not be consistent. And the most important, another thing is this range changing of positions, I think, is one to kill. Especially those who are making good money. One contract become 3, 3 become 5, then become 10. Then the week they do 10, then the market spread one time. It's not a good game plan. Most of the time you make money in one contract and you lose the money, lose 2 or 3 times with 10 contracts, it will take a long time to recover back, man. Financially and emotionally. Okay, number 5. PICS is probable by expiry if the market underlying which one? A, B or C?
B.
Now who say A? Who say A? B will read somewhere mention. I think there is A somewhere. Definitely B. Why? Because if the fixed development, the underlying must stay within the profit zone. Okay? Okay? If things lose money by expiry, the underlying market price underlying, what happen to it? Up, down, or sideways? A. Break up. Good. For $5 pips, for the call side, the long leg is $5, higher, lower, or same as the short leg? Higher. Good. In the pips, for the put side, higher, lower, or same? Lower. Good. So what's the maximum loss for one contract? Five contract for $5 pips means a pitch trade with a $5 spread. $500 unlimited, $100 strike price difference, strike price difference minus by premium collected. D. Good. For conservative pips, what options are used? A, B, or C, or D? None.
All of them.
Yes and no. Weeklies now depends on time frame. If you use 1 week, 2 week cycle, then is for this time frame is deemed to be more aggressive. That's right. You need case. The problem now is the various time frame. I explain to you how it works now. We got intraday pits, weekly pits, weeklies, monthlies, and intraday self-explanatory. Once you enter, you have nothing to do with it already. Once you enter, you either make or lose. You're not going to take active. You don't wait until 4 o'clock in the morning to cross position. Don't bother. So especially those who are more experienced out there, 4 o'clock in the morning, don't bother to close. Because market maker will bully you upside down. Because why? You are last minute. And last minute said, no, when it's last half an hour, 15 minutes before expiry, no, there's no what we call market players. No more market players anymore. Left the market maker. And market maker know they're left. They're only so-called players in town. And they bully you upside down. So, intraday picks, once enter, act blur. Leave it alone. Then we got intra-weeks. Intra-week picks open with less than 7 days. And weekly is open 2 or 3 weeks, 4 week cycles. You need time to monitor it. Okay, you need time to monitor it. At least, especially intra-week. If you do intra-picks, my advice to you, you need to monitor it every day. Not open body mail. At least every morning or on your computer, see XPX or your smartphone XPX. What is your XPX underlying price in relation to your short leg strike price? If you are being hit, then this morning, Monday morning, today, I say, tomorrow morning, say, my short leg is in the money. Tomorrow is Wednesday, right? Then Wednesday night, you must go back home on your computer and see the market. Should I close or whatever? Intraday picks, intra-week picks must do it real time. Weeklies also say must do it real time. The Mondays, you can take your own sweet time on it until the last 2-3 weeks. Then you need to spend more time monitoring trades. Thomas, why Monday is 6 weeks, 8 weeks, 6 weeks, 4 weeks, 6 weeks, do not need to monitor every day? It's not only monitor because you got 4-6 weeks away. So what if my short leg being hit and my long leg, my short leg is my expiry is August the 1st. August the 1st, how many weeks away? Almost 1 month. So why you worry so much? Of course, if my leg short leg being hit in expiry on Friday night, then you must take action fast. Why we had Thomas last time your piece is very passive? Yes. Last time you can trade down. Sell already, don't care. Now unfortunately market is not giving us the luxury. We're able to trade down because of probably outside and the premium is very high. Now the premium is dropped down to 25, 20, 30% low level. Last time we did 50, 60, 70% is common. So because last time we were able to collect enough premium to offset the losses we face if we trade down. But trade down means that totally we don't monitor it. We don't take action. But now we cannot. We need to Chinese say, "King ka king chiu, fast hand, fast leg." If we get out. So the shorter the time frame you trade, the more thing you need to monitor. So if you trade intraday trade on Monday night open, every day must look at your smartphone, see where is the XPX. Or set alert system if you're under Ting or Sing platform, I said, if underline hit this price, my short price, trigger, send me an email, send me an alarm. The thing machine can do that. The weeklies, same problem. You need to monitor. The shorter time, the nearer to expiry, the more time you need to monitor. So if you're trade, if you're late 6 weeks away, 4 weeks away, 5 weeks away, 3 weeks away, you can relax a bit more so because the week got time on your side. And Thomas, can I close? You can close, but objective exercise is to what? The objective exercise of Pete's trade is to collect time premium. Okay? Understand the concept? Intraday Pete's, I just share to you. But at your level, don't do it. You want to do it? Suggest you go do it, then more count. Try to do 1-2 weeks Pete's and do aggressive 1 to 2 weeks Pete's and do conservative monthly Pete's 4 weeks, 6 weeks, 8 weeks away. Let's say your $2,000 budget, do 2 of each. Separate 2 of these, one 4 days, 1 day 7 days expiry, 1 14 days expiry, 1 25 day expiry, 28 days expiry, 1 maybe 42 days expiry. So you have a spread of trades. Thomas, how to is it? That means I cannot maximize return. It's not your job is not to maximize return now. Your job is to maximize your learning without burning too much. The less you burn, the better. But of course, I do hope you have 1 or 2 losing trades to put a fear of God into you in market. If you like some batches 5-6 weeks the road make money, I tell you you all are head big, heart big, and for guys then you start bending all my rules. Okay, throw all my risk allocation budget throw out the rules. Last 6 weeks, 5 weeks, I'm invisible. Wow. For 1 contract become 3. Make money, good. Are you sure I will go 6 contracts, 5 contracts, 10 contracts? That is not a good game plan. Be consistent because you do not know when market slap you. So for aggressive Pete's, what type of options are used? 3 days expiry, 1 day, 9 days, or 20 days? Huh? Which one? Huh? Which one? 3. Which one? A, B, or C, or D? No, you can multiple answers for I care. A, B, and D also considered aggressive. Why? 9 days You have to write that. Because you sell 9 days, your safety zone maybe only about 50-60 points apart. Okay? And 1 Achi, 2 Achi, 2 blue back nights, that is going to be 40-50 points away. So, of course, you sell 3-4 weeks away, that is conservative. Okay, what is used to determine Pete's trading zone? Why I said Pete's trading zone is what it means, technically speaking, is what is your short leg. How do you determine your short legs? Big support resistance, ATR, delta, all the above. ATR and delta. Yes, currently I teach you that. In the past, I was using support resistance nice. The market was that friendly though. Support resistance can give me until I cap I tell all my students cap 100% return now. Do not do 100% return. Okay, it means sell $1 can sell 50 cents. Okay, now cannot already. The good old days is past. Hopefully may come back again in the future. I do not know.
You mean $1 strike price you sell 50 cents?
Yes.
50% return.
100% return.
Oh, yeah, 100.
You lose 50, you make 50 is 100%. Okay, I got pictures of it last time we were trading gold. Okay, now. Okay, good so far. So now ATR time value determines strike price for conservative system. Conservative, we got ATR 6 weekly on weekly candlesticks or yearly chart. For ATR 14 daily on yearly. ATR 3 weekly on Mondays candlesticks. ATR 40 weekly on yearly candlesticks. So which one are you using it? Daily? I think, Carol, I think I suggest you come back for next refresher class again, please. Thank you. No, conservative. Conservative, we are looking at 2 only. We are looking at ATR. A, weeklies on 6 ATR on weeklies, If you do monthly trades, say 4 weeks away, 5 weeks away, then you look ATR 3 on Monday. Thomas, can I use a weekly? Can, but it's not as good as 6 cycles versus 3 cycles. Why? 3 cycles for monthly just nice. Okay? For weeklies, 3 weeks may be too short to have enough time frame. 3 or 6, to me, is perfectly okay. So A and B. Anybody put B, daily candlesticks, please do not do that. Daily candlestick is for aggressive trading. You are basing 1 day ATR pricing net. So what are you trading? Intraday. Okay? What ATR values time frame determines strike price for aggressive? Means what? Trades 1, 2, intraday, 1 or 2 weeks, half cycle. ATR 3 weekly on the year, 14 ATR daily on the year, ATR 6 daily on the year, ATR 21 weekly on the year. Which one? There is more than one right answer.
D and C.
B and C. Can. Okay, can. But if you also can use weeklies. Remember, aggressive system can sell 1 or 2 weeks spread. So can you not use ATR 3 or weekly to sell 1 or 2 week cycle? Please be careful. I repeat again. When you use daily ATR, you are using for very, very short time frame. If I say I use daily ATR, means I'm selling 2 or 3 days only, or less. If I use weekly ATR, I'm selling 7 days plus minus. Okay? Okay? Please do not try. Thomas, can I do want to do a 2 week straight, I use monthly ATR. Can I? You can use a 2 weeks aggressive paid using money ATR, you can, but no money. Because why? If you use weekly ATR, you use money ATR on the 2 weeks expiry options, you are sure to make money. Okay? And sure to make money equals to 0 profits. Question so far?
So the answer is which one A and C?
For aggressive one, number A, okay, and number C. Daily ATR 6, what it means we are looking at 1 to 2 days trade. It means Thursday night or Friday night. Thursday night we do something like that. Plus 1 ATR down, plus 1 ATR up, 1 plus minus 1 ATR up will give you sell Thursday night. If happy the returns, that may be good for you. Okay?
So for 2 weeks, usually we use the weekly already.
I have to use weekly as a reference point. Oh, by the way, you got 2 choices. ATR or delta numbers, whichever further away. This doesn't mean give you definitive strike price to sell. This will give you suitable strike price for you to look at it from there, plus minus adjust forward, adjustment upwards. So now if I go do a delta pits, the pits will give you what we call a bearish pits. Means that this pits is priced to, is actually structured to go for market downwards retracement. But unfortunately, the market has not been retracing down for the last 3 months. Okay?
One question, do you guys know how to select, you guys know how to select the strike price using delta, correct? What about selecting the strike price using ATR?
Yeah, we will run through it later. Yeah, still here. Let me finish the first. Okay? This one don't wait too much. That's why I said you need the live account. I can teach you all the best thing. And you do demo trade. It's like playing cash flow game or Monopoly. No feeling. If one of you lose $800 in one trade, wow! Sorry, Miss T. I feel very bad for you. Once you lose somebody lose $800, you all wake up ideas, okay? $800 and I can bring my girlfriend or my boyfriend to Bangkok for a nice trip. And still got shopping money. Okay? So, what are delta numbers to use to determine suitable strike price or pitch conservatism? 0.1, 0.5 or 0.3? Who said 0.1? Can? 0.1 can Conservative. Very conservative. If you got enough premium, I think go ahead. Nothing wrong with it. And again, remember, we need to collect 20-30%, 20-30-40% range out of it. But see, Thomas, normally we can get this number. Normally we can get this number for similar. We are trading so far in time for similar value, for similar credits we collected in exchange for bigger safety zone. Bigger safety zone got superior advantage over small trading zone. Okay, safety zones. So delta 0.1 can, no problem. If you get enough credit for your trade, $1, $1.20, $1.30, or whatever it is for delta 0.1, I say go ahead do it. This is good at selling delta 0.15 and 2-3 weeks before expiry. Delta 1.5 is your standard reference point. I say it's a reference point. It's not die and live and die by delta 1.5. You need to adjust it to see the flexibility of the market. Sometimes if you sell delta 1.5, even you move 2 strike price further away, you still get 10 cents cheaper. 10 cents, collect 10 cents less money. I said, take the 10 cents less money, go up 2 strike price. Objective exercise is to minimize our risk in terms of loss, in terms of lose probability. Delta 0.3 can, but this is not for passive, this is not for pizza, this is for advanced options. Okay? Delta numbers determine strike price for aggressive peak system. 0.1, 0.5, 0.3. Which? Huh? 0.3. Huh? 0.3. 0.3. Okay, stop. Who said 0.3? Okay. 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 Who said 1.5? Who said delta 0.1? Please, my two young, my two lovely ladies, please don't use delta 0.3. Delta 0.3 is for directional trading. They will not confuse, correct? Ina? It's J. Okay? Please don't. Do not confuse. Delta 0.3 is purely for directional trading. If you use delta 0.3 to do pits, that one I can put triple X in front. Can be done, but that one is your skill level, your decision to do it. Remember, delta 0.3 is much more nearer or further away from the line. Nearer. How much money collect more? A lot more money? Not much money more. Maybe a 50 cents more, whatever it is. For 50 cents more, you exponentially increase the probability for you have a losing trade. So you need to think about it. You want to think about it carefully. You want to have a winning trade, you want a high probability winning trades, or you want to have high return trades. If you want to have a high return trades, then you must aim for low probabilities. The pay system which I teach you all, I got some students bend until my rules got distorted, get 400% return. 400% return. Common, say. His best return was 450%, 900% return. Means that for $5 spread, he sold for $4.90, $4.50. Yeah. How many times win? Okay? That be all, ladies and gentlemen. If you can make 9% return, even for 900% return, even for PACE methods, you think high probability or low probability now? Low. That's a 9% return probability, 9%. Okay?
So what's the answer for that then?
Okay, for aggressive one, now we look at delta 1.5. We can go down to delta 1 if we get the money for it. Go to delta 3 is too much. Maybe if you're aggressive, you know what, you can maybe go to one strike price nearer. But you can't use delta 0.3. Delta 0.3 is pushing a lot. So we use it, delta 15 as a reference point. From there you plus, in this case should be, because aggressive is plus. If you use conservative, should delta, you need minus. Because remember, conservative, you are exchanging time for higher probability, for same amount of 30-40%, 20-30-40% returns. Questions? Questions?
I got something I don't know very relevant to this. So you're mentioning that if the market is giving you bearish type of risk returns, right? Okay. But the market is still going up, right? Can you go adjust the 50-50% from the strike price?
Don't need. The ATR will adjust for you. I told you that the ATR will give you. So you choose number, which one? If you discover, example now, last week trades, I think last week ago, we do a combined delta ATR trades. If you notice, on the put side, we use delta. On the call side, we use ATR. Okay? Anyway, this one got time tonight, definitely run through again. So it's just to compensate. Thomas, can I use both side ATR? Can. If you use both side ATR on the trade, you discover suddenly, hey, wow, my put side ATR, same ATR, let's say 30 points, let's say 35 points on the call side, and the 35 points on the put side. The put side, the call side delta 0.10 or 0.12. The call side is delta 0.10, 0.12. The call side, ATR 35 or 40, give you delta 0.3. Okay? So why don't you compare best of the both worlds? Okay? Because the market, I think the option market maker have been losing money for the last few months. But then they are expert, they can afford, they are expert. So anyway, in the long term, I won't bet against that. But in light of what's going on, the market makers can outlast us anytime. So we need to adapt the market. We cannot hold the thing. We need to change system. It's still P system. It's just only different parameters, different entry points. In fact, P is now, as it is now, last time I used to teach only one time frame only. Okay? Now I'm teaching in the multiple time frames. Last time I used to do what? Aggressive, 1 to 2 weeks. Conservative, months. 2 months. Now I got intraday, intra-pits. This one last time I can't do it because last time I don't have the enough options to do every Friday, and the premium the system is market liquidity is not there. Now market liquidity there. So when the time is right, we will do intraday pits. But intraday pits is considered the most extreme form of pits that I could teach you at this moment in time. Thomas, your old students make 400%, 500% return. Canada, that one even more extreme. That one is so extreme, I won't teach you. Okay? So, after determine the strike price, what is the next step? Execute a trade, determine stop loss, check risk and reward, all the above. Who said A?
A and C.
A and C, Correct, A and C. Please, we have no stop loss here. You know why no stop loss? If you want to put stop loss, go ahead. Okay? you go setting time, okay? Number 18. What should you do when market move more than 60% of ATR value before execute a trade? Contract, execute a trade, readjust the strike price, do not take a trade, call me. Don't do that. Don't WhatsApp me anymore, okay? The last week one, Timothy said, Thomas, I feel sorry for you. Answering 2 sections. Passive, your group, the passive graduates group,